Hi, it's the 31st of May 2017 and welcome to our 5-minute tax update. Firstly, I would like to congratulate the Deloitte Cyprus tax team for being voted as Cyprus Tax Firm of the Year for 2017 at the International Tax Review European Tax Awards. This is the fourth time in the last 5 years that Deloitte Cyprus has won this prestigious international tax award. During this month, there were a number of interesting developments, including the submission of some important tax bills to the House of Representatives and the signing of 2 new tax treaties. So here is the countdown clock, and let's start. We will start by looking at the most important developments in local legislation. A tax bill was recently submitted to the House of Representatives proposing a number of amendments to the assessment and collection of taxes law. Among the other matters, the bill provides for the compulsory electronic submission of tax returns by all persons, an additional 5% penalty in cases where the tax is not paid within 2 months after the due date, and introduces new fines for non-compliance with decrees, laws and conventions regulating the exchange of information, with particular reference made to FATCA and country-by-country reporting. On the 15th of May, the Commissioner of Taxation informed the House of Representatives that the long-awaited computerized system for electronic settlement of overdue taxes would be available to taxpayers by early June. During this meeting, the Commissioner clarified that where a taxpayer settled his overdue taxes through a single lump sum payment, 95% of the interest and charges will be written off. Finally, and although VAT is outside the scope of our tax webcast series, the recent developments around the imposition of VAT on land transfers has grabbed our attention. For the last few weeks, the Finance Committee of the House of Representatives has been discussing a VAT bill for the imposition of VAT on the sale of land, but as of today, no final version has been submitted to the House for voting. Should the bill be voted into law within the next month, the plan is to have our VAT service leader, Christos Papamarkidis, who will update us on the details of the new law. Let's now move on to some international developments impacting Cyprus. On the 8th of May, in a joint press conference, the Ministers of Finance of Cyprus and Luxembourg expressed their concern on the impact of the Common Corporate Tax Base proposals. As a reminder, the CCTB provides for the determination of a single set of rules for the calculation of the corporate tax base within the European Union. The concern of the two ministers is that the taxation rules should not be set at an EU level, but at a national level, as these rules may lead to a situation where Europe becomes less competitive in terms of taxation than the rest of the world. On a last note, on international developments, following the Council of Ministers' approval for the signing of the Multilateral Convention last month, Cyprus will sign the Multilateral Convention in a ceremony that will be held on the 7th of June in Paris. The signing of the multilateral instrument will ultimately update all existing treaties through the integration of the minimum standards of BEPS Action 6 on treaty abuse and Action 14 on making dispute resolution mechanisms more effective. Let's now look at some tax treaty updates. On the 3rd of May, Cyprus signed a tax treaty with Barbados, which was published in the Government Gazette on the 12th of May. The treaty provides for zero withholding tax on dividends, interest and royalty payments. A few days later, on the 8th of May, a tax treaty with Luxembourg was signed. The applicable withholding rates are as follows: zero withholding tax on dividends if the beneficial owner is a company which holds directly at least 10% of the capital of the dividend-paying company. Otherwise, a 5% withholding will apply. Interest and royalties are subject to zero withholding tax. And lastly, on the 19th of May, Cyprus and San Marino signed a protocol updating the existing tax treaty between the two countries, which was signed on the 27th of April 2007. We will close off today's tax update with a brief reminder of the deadlines coming up. As there is no deadline for the 31st of May, we will look at the deadlines for the 30th of June. 30th of June is the deadline for the submission of the 2016 personal tax return by self-employed individuals who do not prepare audited financial statements if their gross income exceeds €19,500 for the tax year 2016 and who submit their tax return manually. 30th of June is also the deadline for the payment of the tax balance for the tax year 2016 through self-assessment by individuals. And by the 30th of June, taxpayers are obliged to pay the special defense contribution on overseas rents, dividends or interest accrued or received during the first 6 months of 2017. Lastly, 30th of June is the deadline for the payment of the second installment of the special tax levy by credit institutions for 2017. This concludes our tax update for this month. Thank you for watching.